Good morning, everyone. Welcome to our strat-based ADR Institute second quarter business roundtable with the theme of new jobs, new opportunities, and rebuilding lives. We would like to thank everyone for registering. We had a little over 130 registrations as of last night, and hopefully they can join us this morning. Allow me to introduce the chairman of strat-based ADR Institute, Ambassador Albert Del Rosario, a former Secretary of Foreign Affairs, and the chairperson of the strat-based Albert Del Rosario Institute. Ambassador Albert.
Thank you, Dindo. Good morning to everyone and welcome to our virtual business roundtable. As we gather here today, the Philippines continues to grapple with the detrimental impacts of the COVID-19 pandemic. With more than a year under recurring levels of community quarantine since March 2020, the Philippine economy remains in recession. According to the Philippine Statistics Authority, PSA, our economy has been shrinking for 5 consecutive quarters until March this year, with a GDP growth rate of negative 4.2%. On top of this, the PSA reported that the unemployment rate in April 2021 was recorded at 8.7%, translating to a 4.14 million jobless Filipinos, which was higher than the 7.1 rate in the previous month. This is compounded by the already high prices of goods, as the 4.5% inflation rate in May 2021 exceeded the government's target of 2% to 4%. Before the reimposition of strict community quarantine measures last March, several bright spots had emerged. Public confidence improved somewhat, adding more hope to a sustained recovery on a national scale. For one, a survey by the Bangko Sentral ng Pilipinas in early 2021 showed interesting patterns of expectations for the year among the business community. According to this survey, business confidence in the Philippine economy improved for the second consecutive quarter, as the overall confidence index for the first quarter of 2021 jumped to 17.4% from 10.6%. From 10.6% in the previous quarter rather. This positive business outlook was attributed to the easing of quarantine restrictions and reopening of businesses, being able to adapt to the new normal, rise in the volume of sales and orders, COVID-19 vaccine rollout, as well as the development of new business and marketing strategies. 2021 may be the much hoped for turning point for the Philippines. For one, the mobility restriction caused by the pandemic accelerated the country's shift to digitalization as more people use the digital space to get things done. Government agencies and private companies around us have been forced to speed up their migration to digitalization to be able to adapt to a new normal. Even meetings, forums, and schools have now gone online. In the process, new business innovations have also emerged, such as online deliveries and mobility as a service, which in turn have given new livelihood opportunities. Many organizations, both public and private, have also included a new work formula in the form of hybrid work arrangements. Work from home arrangements or a creative combination with traditional methods have become a new normal to ensure that production and science and service deliveries are not unnecessarily disrupted. All of these have allowed the economy to slowly get back to normal and for businesses to continue their operations. In our forum today, we have gathered industry thought leaders in a dialogue to share their constructive insights and provide developmental inputs to the formulation of good public policy, legislation, and regulation. In our quarterly series, our event emphasizes on how, amidst the pandemic, the business community can, in a coordinated and calibrated manner, help strengthen the country's competitiveness through trade and investments, and at the same time protect the welfare of their stakeholders with their vaccination programs. The encouraging signs around us is that amid what we all went through last year, the private sector continues to do well not only in keeping the economy afloat, but also in terms of addressing the needs of their shareholders, of their stakeholders rather, from suppliers all the way to the customers and communities to achieve shared prosperity and inclusive growth. The private sector and also have been pushing for a more sustainable and inclusive economic recovery through their environmental, social, and governance initiatives, which seek holistically positive and long-term returns for all sectors in society. In turn, these can help attract the right foreign investments that could accelerate economic revival. Investments by the private sector create jobs, provide income security, and spur economic growth in the long run. And at the same time, exactly a year after a lockdown was first imposed, the private sector stepped up further by purchasing COVID-19 vaccines, not just for their employees, but also for their employees' families. These vaccines are critical in mitigating the risk of the public health crisis and recovering from this deep recession. Indeed, these prove that the private sector is an ideal partner of the government in economic recovery. Through their investments, expertise, and innovativeness, the private sector plays a significant role as a prime driver for the economic upliftment of millions of Filipinos. It is time, ladies and gentlemen, to boost public and investor confidence to keep our economy running and quickly reverse to a growing trajectory that will steadily bring us to a new age of sustainability, made more robust by learning from the hard lessons of this global pandemic. With this vision of shared responsibility and inclusive prosperity at work during these uncertain times, hopefully we will turn around our general situation in the days ahead. Thank you for your attention.
Thank you, Ambassador Albert. And to start our main program, I would like to introduce our moderator for this morning, a good friend of StratBase, who's been with us in our different forums. It's Attorney Karen Jimeno, Director and Chief Legal Counsel of Softcap Partners, a private equity firm. Of course, we know her also as a policy and regulatory specialist for the World Bank and various positions in government as an undersecretary and even as the legal counsel of the Senate Ethics Committee during the 17th Congress. Attorney Karen, I'll pass the program moderation to you, and thank you for accepting our invitation to moderate.
Thank you, Dindo, for that introduction, and thank you, ADR and StratBase, for having me again. It's always my pleasure to be part of your programs. And to deliver our keynote address, it is my pleasure to introduce to you Mr. Diwa Ginigundo. Mr. Ginigundo served at the Bangko Sentral ng Pilipinas for 41 years, retiring from service as the Deputy Governor for the Monetary and Economic Sector. During his stint at the central bank, he led in the development of the government's roadmap in attaining an A credit rating from global credit rating agencies. Mr. Ginigundo?
Okay, thank you very much, Attorney Karen. Ambassador Albert Del Rosario, ADR President Dindo Manhit, officers and members of the StratBase ADR Institute, panelists, special guests, ladies and gentlemen, good morning. I would like to think that the emphasis on the word new in today's theme is not an accident. I cannot think of a better word that would perfectly describe our current operating environment. As the IMF appropriately called it, the pandemic crisis is like no other. First, there was really no rule book for understanding COVID-19 and how it would play out. A year and a half into the crisis, and we still find ourselves grappling with it, with the challenges associated with the crisis. Even as early signs of green shoots are beginning to be seen, recovery continues to be tentative. Risks linger and new variants appear. Uncertainties remain elevated. Second, the pandemic has forcibly replaced old life as we know it. It has ushered in the so-called new normal, which, as most of you would agree, has become the world's buzzword in the last year or so. What do we see as risks and challenges of the pandemic on the domestic economy? How can public policy, monetary policy in particular, help us navigate this new normal and bring the domestic economy back on its track to recovery? Now, while the pandemic is foremost a global health crisis, the necessary measures to contain its transmission has virtually put the global economy to a freeze. As Bergloff and Farrar of 2020 argued, the pandemic has actually morphed into a two-pronged health and economic crisis that affects economies through multiple channels. First, the pandemic has direct impact on the real economy. On the demand side, mobility restrictions and social distancing measures have significantly dampened consumer spending. On the supply side, containment measures have directly hindered production, which resulted in a cascading disruption of local and global supply chains. Now, the macroeconomic results could only be serious. It could only be dire. Global GDP dropped by 3.5% in 2020. Closer to home, the impact of the global health crisis was also immediate. With our failure to promptly restrict international travels and organize our testing, tracing, and treating capability, we saw the virus ravaging both jobs and lives. Our health facilities were more than overwhelmed. We were forced to lock down the economy. As a result, we plummeted like never before since 1947. Our output slumped by 9.5% in 2020. Second, the pandemic also shook the global financial markets. They rocked with sharp volatilities when the World Health Organization officially declared the coronavirus a pandemic on March 11, 2020. And third, the turbulence was also felt in the domestic markets. Concerns over the pandemic dampened investor sentiment, which triggered flight from risky emerging assets, including Philippine assets, to safe haven markets like gold and US treasuries. We saw significant sell-off of the Philippine financial assets and decline in asset prices. Now, beyond these challenges, we also face some key risks. First, concerns over the pandemic have led to weaker lending by banks. As a result, these institutions, being risk-averse, chose to be pro-cyclical and imposed additional premium to compensate for the risk to higher interest and borrowing costs. Over time, both higher borrowing costs and lower profitability could make it difficult for firms to service their debt obligations. This could lead to higher probability of default. Initial figures on both corporate distress and non-performing loans unfortunately validate this direction. Second, there could be a permanent impact on labor productivity. Wages and labor productivity have been upset due to sickness, premature deaths, and workplace absenteeism. Structural changes could also further lower productivity. And without doubt, the pandemic has shifted relative prices in a manner that incentivizes firms to invest in machines instead of people, thereby further lowering employment and labor productivity. Eventually, lower income for households and firms could mean depressed consumption, thus prolonging economic recession. And this is what we are seeing today. Third, the pandemic could also pose costly structural risks among firms and industries. Consumers typically change their spending behavior due mainly to decreased income and household finances, as well as fear and panic that accompany the pandemic. Fourth, the pandemic's impact could also worsen inequality. For instance, higher paid workers are typically working from home, while lower paid blue-collar workers do not have this kind of option. The effects of the lockdown measures on labor conditions of different sectors in the country are indeed asymmetrical. All of these challenges could have scarring effects and long-term structural impact on the domestic economy. Now, ladies and gentlemen, this brings me to the role of monetary policy. Monetary policy can help mitigate the socio-economic fallout from the pandemic by playing three key essential roles. Namely, one, to ensure that the overall monetary stance is sufficiently accommodative. Two, to stabilize market function and ensure the smooth transmission of monetary policy to the real economy. And three, to maintain ample central bank liquidity, especially to maintain the flow of credit. The timing of monetary policy is also critical for long-term outcomes. Accommodative policy early in a recession can prevent hysteresis from occurring, enabling quicker economic recovery. But delayed interventions may lead to the existence of multiple steady states that would prevent an economy from reverting to full employment much quicker. Now, our monetary authorities, the BSP, responded promptly and appropriately to ensure adequate domestic liquidity, sustain the flow of credit, and shore up confidence in the domestic financial system. They were achieved by monetary easing through interest rate cuts and liquidity injections, as well as regulatory easing through temporary relaxation of some BSP regulations. Now, the BSP also resorted to large-scale asset purchases to combat serious economic implications of the COVID-19 pandemic. Now, this large-scale asset program was particularly focused on ensuring proper market functioning and prevent unwanted tightening of monetary conditions. Now, in terms of regulatory relief, the BSP allowed a time-bound relaxation of regulations on compliance reporting by banks, calculation of penalties on required reserves, and single borrower limits. We can therefore argue that the BSP's monetary response contributed to the immediate easing and improvement in domestic liquidity conditions in the first half of 2020. The pandemic's deep negative impact on the real economy could have been worse. While these monetary measures are necessary to calm financial markets, they are not sufficient to steer economic growth back to recovery. The efficacy of the monetary stimulus implemented by the BSP is hampered by the lingering uncertainties around the successful pandemic mitigation in the Philippines. The rate of infection remains in the thousands, vaccination hesitancy continues to be widespread, and with limited vaccines rollout, the Delta variant risks another upsurge. Yes, there appears some green shoots after a winter of deep recession. While output decline continued into the first quarter of 2021, the rate has somewhat slowed down. While inflation has also been rising beyond the 2 to 4% target in the first 5 months of the year, averaging 4.4%, this was driven mainly by temporary supply shocks. Upside risks, however, remain, including a possible bounce back in oil prices due to global economic recovery. Sentiment has improved for both business and consumers after dropping sharply in early 2020. This is what Ambassador Rosario was referring to earlier. Now, these indicators clearly suggest that while early green shoots have emerged, the country's recovery remains fragile. Downside risks exist in the form of renewed spike in local transmission due to the new variant, possible reimposition of lockdowns, and of course, the economic scars. Yet monetary policy cannot be the only game in town. Agustin Carstens, General Manager of the BIS, conceptualized the life cycle of a pandemic-induced crisis as having three phases: liquidity, solvency, and recovery. In many cases, monetary policy actions can only be most effective in the first phase. For the later phases, the heavy lifting should come primarily from fiscal and structural policies. For indeed, ladies and gentlemen, monetary policy has its own limits. For instance, fiscal policy should be used to improve healthcare system. Targeted fiscal responses such as cash transfers and expanded unemployment benefits should be used to improve the welfare of affected workers and households by ensuring that they have continued means to purchase goods and services. The national budget for 2022 should be so designed as to sustain them. Allowing central banks to take on broader public policy goals could potentially overburden monetary policy. And doing that may eventually diminish and compromise the independence of central banks, reduce their effectiveness in maintaining price stability and contributing to crisis management. We will therefore argue that this pandemic requires a well-coordinated mix of policy responses. A whole-of-government approach is needed to rebuild the domestic economy. This brings me to my last point. Ensuring successful recovery also requires fresh approaches. What new ideas do we have in mind? First, the pandemic has shown several advantages of the digital economy. The private sector can lead in the innovation of digital products and services that would allow us to increase both the reach and facility of markets, even in these difficult times. Second, this crisis has also taught us the importance of agility and flexibility. A number of organizations suffer from slow procedures, complex bureaucracies, and rigid hierarchies. The coronavirus has forced us to break through these rigid systems and act nimbly to solve pressing issues. Lastly, the pandemic has also taught us to take care of our environment. A green and inclusive recovery will significantly enhance the resilience of our economies and societies in the face of both the severe recession and accelerating environmental challenges. Ladies and gentlemen, these are areas where the private sector can capitalize and play a major role in rebuilding our economy. Let me wish that this forum could spark new ideas needed for us to leverage on new opportunities in this new normal environment. Thank you very much for your kind attention.
Thank you so much, Mr. Ginigundo, for that very insightful and relevant keynote address. And now we'll start with the first part of our program, where we will be discussing the reopening of the economy for business continuity. And even under various levels of lockdown for more than a year now, the private sector continues to not only keep the economy afloat to achieve shared prosperity and inclusive growth. Their investments can boost the country's exports, create jobs, provide income security, and spur economic growth in the long run. And our first speaker will talk about ensuring job and income security amid uncertain times. Our first speaker is Mr. Edgardo Lacson. and he is the chairman of the board of the Employers Confederation of the Philippines. He's also the director of the Philippine Stock Exchange. He was formerly president and honorary chairman of PCCI. Mr. Lacson also holds executive roles in various business firms, including MIS Maritime Corporation, Safe Seas Shipping Agency, Marine Industrial Supply Corporation, Metro Store Corporation, and MIL Export Philippines, among others. It's my pleasure to introduce Mr. Edgardo Lacson.
Good morning. I was asked to talk about the topic on ensuring job and income security amid uncertain times. Let me start by saying COVID-19 and the varying trial and error or delayed responses from mild to strict and unduly prolonged quarantine protocols plunge our economy to an unprecedented level. Hundreds of thousands of enterprises, mostly MSMEs, and some large enterprises like Makati Shangri-La for one, permanently closed down, while tourism, transport, personal services, and other critical and basic industries are near the edge of the economic black hole. Altogether, these impacted businesses left millions of workers jobless. To avert social unrest due to the resulting rise in poverty, hunger, and unemployment, government has enacted various stimulus initiatives on top of the existing 4 Ps or Pantawid Pampamilyang Filipino program. Big budget items in stimulus programs amounting to 838.5 billion pesos were appropriated and will be set aside to fund Bayanihan 1, Bayanihan 2, and depending Bayanihan 3. But at this point, the sustainability of the seemingly bottomless spending on stimulus may have to be carefully studied, as it might create a more serious crisis for the next generations. If not halted, it might also unintentionally promote mendicancy, idleness, and encourage a sense of entitlement among beneficiaries. However noble the intention of the stimulus, it is a quick fix or a bandage solution to a wounded soul. Government may have miscalculated the deep impact of the long lockdowns on the economy and resorted to episodic ayudas to keep business alive and save as many jobs while keeping the economy on hold. Government orchestrated various departments to coordinate and synchronize their response to the pandemic. Let us briefly look at the actions taken by some departments. DOLE allows companies to have a work-from-home employment arrangement with safeguards from existing labor laws. It has released ayuda for displaced workers. BIR has extended the period of net operating loss carryover or NOLCO from 3 to 5 years. The President issued an executive order allowing again open pit mining to revive the industry and generate more jobs. Legislators are poised to amend the Public Service Act and the Retail Trade Law to attract entry of foreign capital to industries once reserved for Filipinos to generate more jobs. DILG urged and monitored barangays to honestly distribute ayudas. DOTR issued intermittent guidelines on the allowed riding capacity for public transport. DOH and IATF in tandem issued regular updates on COVID-19 vaccine rollout and the moving level of quarantine restrictions. DOT monitors quarantine protocols in tourist destinations to ensure vibrant economic business activities and health and safety of visitors. DTI champions the clamor of business to unlock the economy to the greatest possible extent and at the earliest possible time. Other agencies are doing their share in their respective area of responsibility. in coordination with all branches of government to bring the economy to a new and better normal. We all agree the government has done a lot to hasten the opening of the economy, but much more is needed to regain the lost momentum and ensure job and income security in these uncertain times. First and foremost, vaccine rollout program must be accelerated to inoculate 77 million Filipinos, or 70% of the population, to achieve herd immunity, a precondition to the full opening of the economy. But targeting end of the year 2021 to do this is 6 months too long for the suffering business and hungry citizens. Please allow me to recommend some measures to help hasten the opening of our economy. For DOLE, temper the punitive and restrictive provisions in labor laws, such as temporarily suspending for 3 years the provision on non-diminution of salaries and benefits. Suspend for 3 years the yearly mandated minimum wage increase. Relax rules on retrenchment process for 3 years. Hasten NLRC resolution of pending labor cases. Immediately cease the disruptive joint labor inspection of companies. Relax the rules for 3 years on contract employment agreement with safeguards to avoid the possible resurgence of 555 or ENDO. Allow mutually acceptable rules and arrangements on work from home employment to give maximum flexibility to companies. Initiate, this is very important, initiate the long pending unemployment insurance system. For BIR, please ease the tax regulations by suspending tax investigations on MSMEs for 3 years. Rescind new BIR regulation increasing tax on private school by 150% under the CREATE law. For ARTA, continue to aggressively pursue the ease of doing business by simplifying, standardizing, and facilitating registration process for new companies nationwide. Mandate the suspension for 3 years of any increases in cost of business, permits, and licenses nationwide, starting in 2022. For our partners in the organized labor, help us together to strengthen our bipartisan compact. Try to suspend for 3 years the demand for wage increases to allow enterprises to rebound and recover. Work closely with employers to bring operation back to pre-pandemic level by resisting the urge to go on strike, slow down, or lockout, and maintain industrial peace. For NEDA, relentlessly encourage foreign direct investment by reviewing and further shortening the short list of prohibited industries for foreign investment. Aggressively pursue in foreign lands the marketing of the Philippines as an investment destination. Continue to rationalize investment incentives for foreign capital to be competitive and aligned with regional offerings. For the COMELEC, ensure fair and credible elections in 2022 and a peaceful and seamless transfer of power. For business owners, for most of us, always observe fair employment policies and gender equality in the workplace. Be a good and law-abiding corporate citizen by paying correct taxes and serving the economy well. Protect and preserve the spirit of tripartism. And lastly, subscribe to the principles of environmental, social, and good governance to ensure business continuity and sustainability. For sure, there are many other areas of important concerns for employers, workers, government, and all stakeholders to keep the wheels of the economic engine turning. But that will be the subject of the next forum sponsored by Stratbase. Maraming salamat po and good morning.
Thank you, Mr. Lacson, and thank you for giving us an insight as to what we can expect in the future forums. And now we'll have our second speaker, Ms. Rizalina Mantaring. Ms. Mantaring is the chair of the Committee on National Issues of the Management Association of the Philippines. She also serves on the Board of Trustees of the Makati Business Club and is also its treasurer. Ms. Mantaring is the former CEO of Sun Life Financial Philippines from 2009 until her retirement in 2018, after which she assumed the chairmanship of Sun Life Financial Philippines Holding Company until she stepped down in 2019. Ms. Mantaring will talk about safely reopening the economy and boosting confidence.
So let me just share my screen. Okay. Can you see it? Is my screen showing?
Yes, ma'am, we can see it.
Okay, good morning. So for more than a year now, we've lived through a crisis unlike any other. As the economy was battered and we tried to turn around our businesses, we saw structural weaknesses and gaps exposed, and we find ourselves at a turning point. We're all familiar with these numbers. Last year, we saw all-time lows in GDP growth rates and consumer confidence. So the challenge for us now is, how do we get back to a positive growth trajectory? How do we get to even the 5.5% growth rate, which was already downgraded from previous estimates? In an economy which is 70% driven by domestic consumption, this means we need to drive up consumer confidence and overall confidence to a level perhaps which would be historic highs. Now, trying to get back to growth, however, while staying locked down, is like trying to drive your car somewhere while keeping the garage door closed. You can't do it. We all know we need to reopen the economy. But when we talk about reopening the economy, the question is always, what's the right pace? How fast is too fast? Because the drop in economic activity is not just from restrictions, but from people's fear of going out. In fact, in the US, they discovered that the damage to the economy from people's fear of going out is about the same as the damage from restrictions. What else did we see in the US? In 2020, some states reopened their economy. They forced the reopening. But the impact on economic activity was modest at best. Spending and employment remained well below baseline levels even after they reopened. And even worse, a fast reopening which resulted in a rebound really reversed the positive economic trends because it was asymmetric. Rising cases result in a decline in confidence, but decreasing cases don't necessarily result in an increase in confidence. So traditional macroeconomic tools they found don't really work well when it's health concerns that are causing causing demand to be constrained. Because people really have to believe that it's safe to go out. Now, what happened when vaccination started? Between January and May, when vaccination of the population was going on and stimulus checks were given out, we saw an increase in consumer confidence. But as more people became vaccinated, their attention turned back to the economy. The weak jobs report, an increasingly volatile stock market, rising inflation, and we saw consumer confidence decline. Now, it went slightly back up towards the end of May, but it's not yet back up to its previous levels. So boosting consumer confidence, as we can see, is really all about security. It's health security and financial security. Health security, people have to feel safe going out. Unless root health concerns are addressed, reopening the economy does not help. And no surprise, it's vaccination, vaccination, and vaccination. The pace of vaccination will determine the pace of reopening of the economy. But we all know that we're not going to get to that level of population protection we need until the end of the year. So meanwhile, We need to maintain the public health and social measures which are tailored to the situation in an area. And the key word is tailored. It can't be a one size fits all. And if this is well done, as South Korea has shown, you don't even need to resort to widespread lockdowns. Governments all over the world are also building up their healthcare infrastructure and surge capacity because people have to believe that if they do get sick, they will be taken care of. And we've seen the impact even here. Between August last year and this year, you probably have the same number of daily cases, but there's much looser restrictions now because we already have more quarantine facilities, more hospital beds, more ICU capacity. Tangible cues are also important. If you've been to a mall, and I've been to several, you wonder how they can possibly do contact tracing. I entered a mall recently, I've been to actually a couple of malls, and showed the QR code. And part of the problem is every LGU has its own contact tracing system, so you have all these different QR codes. I showed the QR code, and the guard waved me through. So I said, aren't you going to scan my QR code? And he said, okay na yan, ma'am. So I thought, how can he possibly trace me? If something does happen, they have no clue. They have no record that I actually entered the mall. So things like those start bring doubt into a person's mind. Can they actually trace me if something happens? So strict adherence is important. And for companies, employee safety and health is paramount. In survey after survey, employees have said that how a company behaved in the pandemic determines whether they will go back to their employers or look for another job, or if future employees will apply to that company, because safety and health has become paramount. And moving forward, it's really all about living with the virus. Singapore now is developing a strategy for life after the pandemic. Where you want to get to is a situation where it's like the flu virus, where every year you know it's going to happen. Everybody gets their vaccine shots, or at least as many people as can. Some people will get sick, some people will be hospitalized, some people will die. But now you're tracing outcomes. You're no longer locking down because you've learned to live with the virus. But this isn't going to happen until we reach a certain level of vaccination and a certain level too of healthcare coverage and facilities. Financial security. It's important that consumers feel that their future is secure, that their finances are secure. And this means jobs. Our previous speaker, Ed Lacson, talked about preserving jobs and how to generate more jobs. So just to summarize, you really need measures for job generation and preservation. Soft loans, etc. The DTI has CARES, which is interest-free loans and collateral-free loans for MSMEs, for example. Public spending. Fiscal stimulus is probably going to drive economic growth this year. So infrastructure spending and more stimulus. But if you said you can't keep that stimulus going because that's temporary. What employees need to see is income continuing well into the future. And that also means investments. Local investments, but also foreign investments. Local industries have been battered. We need investments from anywhere we can get them. And our economy has one of the least in terms of FDIs in the region because we also are one of the most restrictive when it comes to foreign investments. So we need these acts, which have been pending in Congress for a long time past, and other measures to increase FDIs, as Ed mentioned earlier, improving our public image and so on, improving our image overseas. Because really bottom line is employees need to feel secure that their income will continue. Now, running through all of this is leadership. The most essential element of crisis leadership is clear and trustworthy communication. People have to believe that their leaders are transparent, they're honest, and that they understand their situations and can empathize with them. Leadership should provide direction in a decisive, clear, and consistent manner. And this goes for both public and private leadership. If the direction keeps changing, how can people believe that you actually know what you're doing? The actions to be reliable, a leader's actions have to be based on science and data. They can't be pulled out of thin air. And delivering as promised is important for building credibility. President Joe Biden in the US promised that he would deliver 100 million shots in his first 100 days. And he was well past that. Maybe a case of under-promising and over-delivering. But regardless of your affiliation, on various measures, Biden has different approval ratings. But on the pandemic handling, he has high approval ratings at over 60%. And this means even Republicans give him credit for his handling of the pandemic. Lastly, us as businesses, this pandemic is a chance for us to redefine the future. We have been forced to operate in ways we never have before because the old ways simply weren't going to work anymore. And the changes brought about by the pandemic, many of them are going to be permanent. The future will be much more digital. There'll be much more automation. You'll see AI, you'll see robotics, you'll see increased investments in these. So it's incumbent upon us to prepare our workforce for the future. But also our educational systems have to be changed so that there's more STEM, there's more subjects on the skills needed for the future. We need to create an enabling environment by passing laws and by developing the infrastructure that will help move the Philippines towards an increasingly digital future. But beyond that, we have a unique opportunity to create lasting growth. Over the last several decades, we've seen periods of rapid improvements followed by decline, rapid growth followed by decline. And sometimes it feels very depressing and demoralizing that just as we're about to take off as a country, you see a decline once again. And perhaps we ought to think maybe it's because our structures really are not built for lasting growth. I have always believed that if we're unable to bring the bottom of the pyramid up, then progress cannot continue. Because where will the clients of the future come from if you're reliant on a very small pie? I think we need to change our orientation from maximizing profit to building a thriving and prosperous society in order to build that much bigger pie of the consumers of the future. As the saying goes, in a rising tide, all boats rise. Thank you very much.
Thank you so much, Ms. Mantaring. You had excellent points, especially about leadership and also the role of private sector in redefining our future. And now we'll have our fourth speaker, Mr. Calixto Chiquiamco. He is the president of the Foundation for Economic Freedom. He is also the founder and president of MRM Studios, a mobile entertainment, digital music, and e-commerce company. He's also a member of Syracuse University Alumni Association and of the Philippine Internet Commerce Society. He's also a very busy man. He sits on the boards of 8 companies. Mr. Chiquiamco will talk about structural reforms for post-pandemic recovery. Mr. Chiquiamco, you have the floor.
Yeah, wait, allow me to share my, okay. Yeah, do you see the slides?
Yes, we
Hello.
can see it.
Yes.
Okay.
Yeah.
Okay, my topic is the post-pandemic structural reforms. I was given only 10 minutes to make my presentation, so forgive me if I sometimes just speed through the slides, and I will just take questions perhaps in the open forum. So this is the outline of my talk: challenges of the post-pandemic economy and the structural reforms that we must do to get out of this economic setback. So what are the challenges of the post-pandemic economy? Well, of course, the lingering effects of the pandemic and preparing for the next one. The massive joblessness. I think the unemployment rate has doubled during the pandemic. Hunger, rising food prices, and food insecurity. Climate change has exacerbated the food insecurity worldwide. Of course, climate change and natural disasters. At least in the States now, you're seeing a record heat. Water and energy security. I mean, here now we are facing possible brownouts. Water security, of course, in terms of the water. No new dams have been built. Rising fiscal deficits. Uh, because of the pandemic, of course, revenues, governments have plunged while spending has increased. The US-China rivalry is still there, and we have to contend with it. Of course, finally, the fourth industrial revolution that's continuing to happen. In fact, the move toward digitalization will accelerate because of the pandemic. So what are the binding constraints that we have to address? One is monopolies and oligopolies of strategic industries, a lack of competition, resulting in high prices and poor services for consumers and intermediate industries. So what are the reforms needed? One is, I think, the best solution is still constitutional change to remove foreign ownership restrictions in the Constitution. A second best solution will be the amendment, the Public Service Act amendment, which will allow 100% foreign ownership in telecoms and transportation, and just leaving power distribution, storage, and water distribution as public utilities subject to the 60/40 rule. Now, agriculture, what's the binding constraint? Land fragmentation, a single biggest problem in agriculture, prevents modernization of the agricultural sector. That is the application of capital, technology, and management to agriculture. According to economists Tasso Adamopoulos and Diego Rusticia, who did a study just 2019, because of land fragmentation, agriculture productivity fell by 17%. So while we are successful in distributing lands through CARP, actually this made farmers poorer. The average land size is now only about a hectare. Too small to apply, economies of scale, machinery, etc. So what are the reforms needed? We have to amend CARP to increase limit on agricultural land ownership from 5 to 24 hectares. Why 24? Well, that's the limit in the 1935 and 1973 constitutions. We should modernize our agricultural land leasing laws, maybe set up agricultural eco zones for unproductive and idle lands, maybe designate a land bank to consolidate lands for agricultural investors. That means they lease lands from farmers and sublease it to investors. And finally, debt condonation of unpaid agrarian lands. Debt condonation will stimulate the leasing market for agricultural lands. Because right now, a big number of CLOAs are still are mortgaged to the land bank and they cannot lease them out. So we need to promote labor and labor-intensive industrialization in order to generate employment. The reason why we are not doing this and why investors are flocking to Vietnam and Bangladesh because of high legal minimum wages and inflexible labor laws on security of tenure. So with the problem of high minimum wages as relative to productivity, we suggest special employment zones where labor and capital will be free to negotiate their wages. No, this will be in high unemployment zones, and maybe a holiday rationalization act or one holiday only per month. Right now, employers are paying effectively 14 months because there are, I think, about 26 mandated official holidays. Regarding labor security of tenure, we should pass the apprenticeship bill, increase the probationary period to 2 years from 6 months, and ease termination policies in exchange for portability of pensions. In other words, for labor, we will give them portability of pensions. Unlike now, when they resign, they cannot take their employment with them in others their pensions with them when they resign. Extended Job Start Act. The Job Start Act only allows for 6 months. We suggest that this be extended to at least a year. And finally, amend the labor code, especially with respect to settlement of labor disputes, which have become which causes a lot of uncertainty for employers. Other reforms, forestry reforms, we should promote forestry, especially now in the era of climate change. So we have a competitive advantage in forestry, being in a tropical country. So we suggest the creation of forestry ecozones where the government will guarantee that it is free from conflicting claims and invite investors to invest in tree plantations. And we should also create a forest cadastre in order to make sure that there is some kind of registration of property rights in the forestry. Unlike now, we don't know who has rights to what and what they have. Unlike now, with land, we do have a system of land registration. So we suggest that the government create some kind of forest cadastre. For mining reforms, I think the government has already lifted the moratorium on new mining deals by EO 130. But they should follow it up more by lifting the open pit mining ban, and also pass a mining tax law that takes into consideration that incomes from mining are very volatile, and therefore maybe the tax rate should also fluctuate together with the prices of minerals. Finally, on infrastructure reforms, the government should go back to solicited PPPs to address growing fiscal deficit and execution problems. Finally, I would suggest that we depreciate the peso to protect local industries, increase purchasing power of OFW households, and spur consumption spending, promote exports, promote agriculture and other high domestic value industries, and increase government revenue. Thank you.
Thank you, Mr. Chicamco. It was very impressive how you fit so many sectors within 10 minutes. And now we'll move on to, yeah, very impressive. Must be the juggling of 8 board seats. Now we'll move on to the important topic of education, specifically the role of private educational institutions in human capital development. And to talk about this, we have Attorney Joseph Noel Estrada. Attorney Estrada is the Managing Director of the Coordinating Council of Private Educational Associations, or COCOPEA, an umbrella organization of private educational institutions in the Philippines. He is currently the managing partner of the Estrada and Aquino Law, and Attorney Estrada is also counsel to several educational associations, such as the Philippine Accrediting Association of Schools, Colleges, and Universities. Attorney Estrada?
Thank you, Attorney Karen, and good morning to everyone. Good morning, President Dindo, and congratulations for organizing this forum. Allow me to share my screen on the topic. The role of private educational institutions to human capital development. According to World Bank Human Capital Index, a child born in the Philippines today will be 52% as productive when she grows up as she could be if she enjoyed complete education and full health. This is lower than the average for East Asia and Pacific region, but higher than the average for lower middle income countries. In the Philippines, a child who starts school at age 4 can expect to complete 12.9 years of school by her 18th birthday. So education in general contributes to the country's economic, social, and cultural development through the development of its human capital. Education in our country, as you may know, is composed of two sectors, the public and the private sectors, to form one Philippine education system. And the private education sector assumes a complementary role in the delivery of education and therefore deserves state support. This complementarity is actually recognized by our 1987 Constitution. In terms of complementing the access provision of our government educational institutions, private education accounts to 9% of enrollment in elementary, 22% in secondary education, and 45% in senior high school enrollment of the total enrollment in K to 12, and 54% of the total enrollment in higher education. Of course, these numbers are pre-pandemic. In terms of quality, private education sector contributes to national education system's efficiency in terms of high rates of return of graduates and employability and meeting industry needs. Of course, we have this Republic Act 10533 or the K-12 law, which was passed in 2013, which is said to be a compendium of all necessary educational reforms. We're still in the middle of its transition. The full transition will be having the first product of the entire 12-year program by school year 2023. And one of the major components of the K-12 law is, of course, the senior high school program, which the objective of which is twofold: to prepare graduates for employability and entrepreneurship. And of course, among the other reforms introduced in basic education. In terms of higher education, the private education sector fills gaps in provision. 7 regions, mostly in Mindanao, depend on the private education for access and catering to more than 50% in student enrollment. Again, these numbers are pre-pandemic. The contribution of the private education institution in terms of education access is really substantial. In terms of performance in licensure examinations, also the private sector has a high rate of performance, almost comparable to those graduates taking the examinations in the state universities and colleges. And also in terms of academic levels, in tertiary or pre-baccalaureate, baccalaureate, postgraduate, including master's and doctorate, the private sector also produce higher education graduates around 751,000 in academic year 2017-2018. But of course, all of these numbers have changed, and the contribution of the private sector is now in danger, because during the pandemic, the private sector is one of the sectors badly hit by the pandemic, as you may know, because of the economic impact on families, students, and even the academic personnel and the teachers and faculty. According to the Department of Education, just this school year 2020-2021, 900 schools have closed, 900 basic education students failed to enroll, and a high percentage of higher education students or higher education institutions have suffered. 50% of them suffering 10 to 50% decline in enrollment, and this trend will likely continue without the necessary economic and policy intervention of the government, because as you may know, the private education sector is funded by tuition payments of parents. It is not funded by government appropriation. And this problem has also been exacerbated by the recent problem on the taxability of proprietary education institutions, which saw the tax rate, the income tax rate of proprietary education institutions increased by 150% from 10 to 25%, instead of realizing the concessionary tax rate of 1% under the CREATE Act for the next 3 years. Now, this decline in participation rate of the private sector means that the national education system on the whole would become less efficient without the participation of the private education sector. With the economic situation of families brought about by the pandemic getting worse, and with more schools forced to close, this looming problem, particularly on the learning crisis, calls for the protective power of the state over the right of all citizens to quality and accessible education at all levels. Education indeed should not only continue. For us, quality education must thrive. The evolving transition to a digital economy and the anticipated rebound from this crisis is both a challenge and an opportunity where our education institutions must produce the brain power and skilled workforce that our country needs to remain globally competitive. Quality education deserves priority, promotion, and protection of the state in all our recovery programs post-pandemic. Our suggestion for policy reforms, some of these include expanding student subsidy programs. Many of the bills have been filed already in Congress. We hope that our legislature hasten the approval and eventually the enactment of these bills. I'm referring to GASPE in terms of the education service contracting and the senior high school vouchers, expanding it to more slots, including the amounts, increasing the amounts, and also expand existing teacher subsidy programs to include training for upskilling and reskilling of our teachers to flexible platforms on education. And also, of course, for our legislature to hasten the passage of Senate Bill 2272 and 9596, sorry for the typo. This refers to the clarificatory bill on the taxability of proprietary educational institutions, as mentioned earlier, on the issue on the increasing the rate of the income tax rate of proprietary education institutions. And lastly, to revisit the implementation of the K-12 law, or the RA 10533, not to repeal it or revoke, but to strengthen it and eventually address our learning crisis. Thank you very much, and good morning again to everyone.
Thank you, Attorney Estrada, for that very enlightening discussion on education in the Philippines. We will now proceed to an open forum, and this will relate to all the speakers that we heard from in part one of our program, wherein we discussed the reopening of the economy for business continuity. Um, and this is where we can ask all our speakers for part one questions that we may have. And yeah, so we'll start the open forum right now. And I suppose people can also put their questions in the chat section, or you can also unmute yourselves and ask a question. So we received some questions to start off. And for the first question, this can be addressed by any of our speakers for part one of the program. At the rate things are going in the country, what sectors or industries are showing signs of recovery? So I think this can be covered by anyone, or Mr. Toti Chicamco, considering that you covered so many sectors. Is this something you want to address?
Well, what they say is we will have a K-shaped recovery, right? With some sectors going up and some sectors continuing to suffer the economic scars. Of course, those that involve some kind of face-to-face interaction, whether live events, hotels, tourism will continue to suffer for as long as the pandemic is not put under control. No, but those that will, of course, show signs of life and thrive will be, those that can, as I said, be done work from home or shift to a digital economy. Right now, for example, there has been an explosion in online banking or online financial transactions. So those are the ones that will really prosper after the pandemic. But of course, as the economy opens up, you will see um, increases in, for example, activities in malls, in retails, etc. But again, it will be erratic because of uncertainty still about our ability to be able to put the pandemic really under control.
Thank you, Mr. Chicampo. Unless any of the other speakers have something to add, uh, I'll ask the second question that we received. And this, I think, can be answered by Ms. Mantaring. In what other areas does the private sector need assistance from the government for them to continue their operations amid the pandemic?
Yeah, I think a lot of it was actually mentioned by Ed Lacson, no, in terms of relaxing some of the restrictions that are there for the taxes, for example, but deferring some of the taxes that have to be paid for education. They're asking that you reverse that the 25% tax and bring it back to the 1%. So it's really relaxation of a lot of the restrictions, and then some of the programs of the government, like I mentioned earlier, for MSMEs, there's the loans, the program that they have for providing loans with zero collateral and with zero interest. So things like those, I think, would be of help. Now, another stimulus. We're often criticized for not providing as much stimulus as other countries. And because demand is the one that's constrained right now, perhaps more stimulus would also help the private sector.
Thank you. Those are very good points. Especially, I think the recent ranking for COVID resiliency came out, and the Philippines was in the bottom two. We were second to the last, and one of the metrics they used was also the strictness of the lockdown. So that's a
Yes.
very good point on lockdown measures.
Yeah,
Um,
yeah. Speaking of lockdowns, I forgot to mention also, we haven't been very good in testing, contact tracing, testing, and the use of data. And that kind of massive effort is really something that we need from the government because, as mentioned earlier, South Korea never locked down widespread strictly because they did this very well. If you're testing, you're tracing, your data analytics are very good, then you don't need to resort to widespread lockdowns. So
yep,
that's one thing we need from the government.
yeah, very good point. Um, any other speakers, if you want to add anything?
Yeah, Attorney Karen, just very specific to education sector because mentioned education. We have been engaging government to different dialogues since last year in terms of removing administrative barriers for us to see with our delivery of education, especially because until now we have not implemented face-to-face going back. So it's really the innovativeness and the creativity of our education institutions that will really come into play. But without the policy flexibility that is given to us, we cannot really exhaust that space. And one thing about good about the pandemic for education is that it has allowed us to really focus on the learners, the the essentials of delivery of teaching and learning, and just do away with the other things, no? So parang naging level yung playing field, no? Even the smaller schools, but better delivery in the remote learning, they had the good chance. They were able to deliver in terms of quality education. So moving forward, we really hope that government could support complementarity. And one major point there is that we have too many empty schools and spaces. While the private schools have the resource, both human resource and facilities, we do not have enrollment. And the first problem is sustainability. We hope that government can tap the private education sector to help them deliver education to our 27 million learners in the country. Thank you.
Thank
Yeah.
you. And
Karen,
yes.
with respect to education, my suggestion is for the government to scrap that free college tuition, because state schools are inefficient. You spend double to produce one graduate than the private sector. Let the private sector be the one to educate. Instead of free college tuition for state schools, they should expand the scholarship and let the individual student choose which school that they will go to.
Yeah, I agree with
Almost
that.
like it's like outsourcing what people can do best, right? Like just leave it to those who can perform certain functions best. And I think this is a great segue into the next question that we have, because it's really about learning from prior experiences. And from the recent crisis we had with the pandemic, what lessons can be learned in the efforts exerted by various players in society for inclusive recovery? So I think Attorney Estrada already talked about some of the things that we learned from the education sector in particular. But yeah, what lessons can be learned in the efforts that the various sectors or players in different sectors for inclusive recovery?
Yeah. Yeah. Can I start with that?
Yes, please.
With this pandemic, the businesses have really had to look at all their stakeholders, not just themselves. For example, for the malls, real estate companies, they had to look at their merchants and keeping them alive, helping them to survive. Because without any shops, what's a mall, right? So they extended leases, they reduced their leases or even rent free for several months to help them recover. And then for the supply chain, there were a lot of companies that, because they knew their suppliers were having difficulty delivering, what they did was to extend, to pay them in advance so that they would have the funds needed to be able to actually deliver the goods. So I think that mindset, and then for the employees, looking at what the employee needs really were, and realizing that new business models work. For example, work from home. Right now, if you talk to companies, many are saying they're not going to go back to fully working on site. They will stay in a hybrid model. So that mindset of thinking of all your stakeholders rather than yourself is, I think, a lesson from the pandemic that we can take moving forward, so that it's not always win-lose. You try to get the lowest prices you possibly can. You try to exact the most you can from your suppliers. Maybe it's building a more win-win mindset, because for you to stay prosperous, for you to continue your business, you need all your stakeholders. You need your suppliers, your employees, your tenants, and so on. So that's a lesson from the pandemic that we can take for inclusive recovery, I think.
That's a great point. And I think that goes into what you said earlier, also, Ms. Monterring, about uh, the private sector's role in redefining the future for shared growth. And any, do we have any other additional inputs on that point, Mr. Totti?
Well, one takeaway is that the importance of basic industries, electricity, internet. For example, we had some brownouts, I think, last month. And what happens now to, those vaccines that has to be put on in cold storage, right? If we are, and also, how do you do work from home if internet is unstable, or even education? If internet is unstable, slow, and unaffordable. So really, the importance of basic industries, the government really should make sure they are quite strong and have the ability to have to be and are resilient in the face of disasters.
Thank you. And I'm looking at the Q&A also sent by some of our attendees for today. And we already have two questions on fiscal policy. I don't know if Mr. Ginigundo is also available to answer this question after delivering the keynote address. But we already have two people asking about fiscal policy direction for the country for business continuity to thrive. So the question really asks, like, what kind of fiscal policies should the Philippines focus on moving forward?
Well, fiscal policy is public spending. And while the government has been trying to expand its public spending, I think it should go to the right areas. For example, I think we have allocated so many billions of pesos for this task force on red tagging. That could be, that could be shifted to a more socially oriented expenditure, like, you know, social safety nets, for example, cash transfer, okay, support to basic industries, unemployment benefits. We are in a very difficult situation, and therefore it is the responsibility of government to provide some kind of a bridge financing to affected sectors. Infrastructure should also continue. However, I think the government should also try and trim the fat. There are so many fats in the budget, both for 2021 and 2022. So instead of going into the right objects of expenditure, those fats, I think, should be trimmed. So I think with the right policy on what right fiscal policy, I think we should have better and quicker recovery. As I said, monetary policy has certain limitations. It should be fiscal policy, structural policy, and enlightened industrial policy on the part of government. Thank you.
Thank you. Thank you, Mr. Ginigundo. Very well said. And our next question relates to collaboration. So we have two participants that asked the same question about collaboration. And the questions are, what are the possible areas of collaboration between the government and the private sector for the development and promotion of industries on the road to recovery? And a related question asks, can you give an example of collaboration of private with the government that has resulted in inclusive growth? So this goes to all the speakers.
Well, I would really say the PPP, public infrastructure. We have seen the skyways, airports. Those are the result of PPP. In fact, because of it should be a matter of fiscal policy that we should shift some to solicited. I want to emphasize solicited PPP. So that the infrastructure the government wants, that's the one that gets built and not the one that will just somebody's pushing. So solicited PPP as a fiscal policy and as a way to make sure that there's better execution on these infrastructure projects.
Anyone else? Attorney Estrada?
In terms of education, the PPP for education has been the subsidy programs of students. We have existing programs since the early 90s and even 80s, the GASTE Act, Republic Act 8545 and RA 6728. But the amounts are really small and the slots are needed now more than ever to be increased. So these are areas for collaboration. These are low-hanging fruits. If we just spend more on this, these are direct subsidy to students for them to be able to continue education. And this goes back to what Toti said earlier. This is empowering the students' choice, being indifferent to the type of school, whether it's public or private. Their choice should not be constrained on what is free and what is better accessible than the better quality. So with the vouchers, they can choose to go, and their choice will be based on quality. So that's an area where we're hoping that the government can really act on, especially if we're talking about inclusive growth. Thank you.
There's
I
also ah okay.
Okay, Lisa.
Yeah.
Your
No. There are also maybe one thing government can also think about is to outsource to the private sector things that the private sector does better. For example, there was a proposal for PhilHealth. It's very difficult to attract very good IT people to the government because the salaries in the private sector are very high. So why don't you just outsource the management of your technology to the private sector? SSS, for example, and GSIS both outsource management of the funds, some of their funds, not all, to the private sector. Again, because the private sector can leverage skills that the government may not necessarily have in-house. So that's another form of collaboration. Let the private sector do what it does best and the government do what it does best.
Those are
I
great
think
answers. Yeah, Toti, go ahead.
Lisa took the words out of my mouth. We should use PPP actually for health. Because the government has been quite very poor, especially under the pandemic, in really managing our health needs. So we should, in fact, I would suggest even a PPP in which uh, they will be judged on the basis of health outcomes, because that's what's important. Health outcomes. So there will be an emphasis on prevention of illnesses rather than on curative, or in paying more for more operations, more procedures, etc. So I would suggest a PPP model for health maintenance and delivery of health services.
I think, Tony Karen, the general idea is that the provision of public goods, which actually should benefit the many, can be outsourced. Precisely what Toti and Riza are saying. No, in general, the provision of public goods, infrastructure through PPP, education, provision of health services. In other words, in general, I think the government should have that kind of principle that whatever the private sector can provide better or best, then it should be outsourced. Of course, the problem here is regulatory capture.
Yeah,
Thank
that's a
you.
very good point, and very similar to a neoliberal economic approach, Mr. Ginigundo. So excellent points. And on that note, I think we can end with the last question from our audience. Someone asked, for all the recommendations put forth by Ed, Risa, Toti C, which ones are actually being seriously considered by the government, if any? If you know of any, but I guess not.
Well, uh, I think they're seriously considering really liberalizing the restrictions on foreign ownership. That is why the Public Service Act, the Retail Trade Liberalization, and the Foreign Investments Act are in the government's legislative priorities. No, and they also have recently, the government's recently made some measures that will help spur recovery. One is, of course, lifting the mining ban, the EO 130, EO 127, which also liberalized satellite broadband, which will enable internet for the entire archipelago, because you won't need cables to be able to deliver the internet in the hinterlands. No, through right now, Elon Musk's Starlink can do that actually right now. So that EO 127 liberalized that. The other thing is, of course, part of PPP also is liberalized tree plantation. Whereas before the government say tree planting program, it failed. So now why don't you let the private sector be the one to plant trees for profit, but it will help in renewing our forests.
Okay. And we have 4 minutes left in this open forum, but I will make an exception for this question from Mr. Ernie Ordonez of Alianza Agricultura, because he is directed this question to you, Mr. Toti. He said that the faulty extension services devolved to the LGUs is cited as a main reason for our agricultural decline. This is because our farmers did not get the government technical support from these extension workers, resulting in uncompetitive products and the need for imports. What suggestion do you have to correct this problem?
Again, it's too much. All programs is totally dependent on a corrupt, incompetent, and inefficient state. What we need to do is to allow capitalism to thrive in the countryside, but it cannot right now because of all those restrictions on rural land, especially for agricultural land. Because, for example, there's a legal limitation to own anything beyond 5 hectares. If you are a productive farmer, you're not allowed to expand. So where, at the same time, anything you do with your land, lease it, etc., the government has a hand in it. You have to get their permissions, etc. So that's the reason why you have very few agricultural entrepreneurs, and that's what's needed. You can't have a program depend on more subsidies, more of this from government. It's not going to happen. It will never happen because we have an inefficient state.
Thank you. Thank you very much. Very well said. And at this point, we'd like to end the first part of our program. And of course, thank you so much, Mr. Ginigundo, for that excellent keynote address. And to all our speakers, Mr. Ed Lacson, Mr. Toti Chiquiamco, Ms. Riza Mantaring, and Attorney Joseph Estrada. Thank you so much again for your time and all your excellent, excellent insights. And we'll move on to part two of our program, where we're going to talk about job creation and vaccination for a shared prosperity. Exactly a year after a lockdown was first imposed, the private sector stepped up further by purchasing COVID-19 vaccines, not just for their employees, but also for their employees' families. These vaccines will be most helpful in mitigating the impact not only of the public health crisis, but also any further economic downturn. And on this note, we will be talking about public-private partnerships, which is very relevant to what our part one speakers talked about as a way for the government and private sector to collaborate. And our first speaker will be talking about PPPs in relation to infrastructure development as the driver of economic revival. And to talk about this is Ms. Cosette Canilao. Ms. Canilao is the president and CEO of Aboitiz Infra Capital, the infrastructure arm of the Aboitiz Group. She has over 20 years of experience in consulting and banking. Ms. Canilao was the former executive director of the Public-Private Partnership Center of the Philippines and was also the former managing director for PPP advisory at Atkins Equity. It is my pleasure to introduce to you Ms. Cosette Canilao.
Hi, thanks, Attorney Mena, Karen. Good morning, everyone, and thank you, Strat-based Dindo and the team for giving me the opportunity to share my thoughts and perspective on this topic. So infrastructure development has long been recognized as a driver for growth and the backbone of the economy. Infrastructure enables businesses, generates jobs, empowers people, and creates opportunities for communities to grow. Increased infrastructure spending by the government generally results in higher economic output in the short term by stimulating demand, and in the long term by increasing overall productivity. This is why many countries are turning to infrastructure as a path to economic recovery. In the Philippines, Build, Build, Build has become the government's battle cry that promises a better future for all Filipinos. However, due to the COVID-19 pandemic that ravaged our economy and health system, the government had to reallocate most of its limited resources. Instead of funding infrastructure, money had to be funneled into various pandemic response efforts, including financial assistance to the vulnerable sectors and vaccine procurement. But for us to stimulate the economy and accelerate revival, we must get infrastructure development back on track. One way to do this is through PPP, allowing the private sector to develop and build much needed infrastructure by using their resources and expertise so that government resources can be focused on other essential social services to the public. Through PPP, we, the private sector, invest in the development, construction, and operation and maintenance, thereby taking up the risks associated with it. It has been proven that the private sector can be a reliable partner, both in infrastructure development, especially when contracts are properly structured, and in pivotal moments of our nation's history. Last year, as soon as the pandemic hit the country, private companies demonstrated their agility and convening power in responding to the situation. We immediately organized our resources to extend help to the people while the government sought budget approvals and set appropriate health and safety protocols. For us at the Aboitiz Group, we quickly mobilized our various business units across the country to give out the aid needed for frontliners, hospitals, and our host communities. To date, the Aboitiz Group has donated over 2.2 billion in COVID-19 aid, and this excludes various payments waived, reduced, extended, or restructured to help our customers and suppliers cope with the impact of the pandemic. Over a year after this global crisis started, one thing is clear. We must take this opportunity to maximize each other's capabilities. Complex and multi-layered challenges such as this pandemic can only be solved and dealt with by working together and with a coordinated approach. Despite the continued challenges brought about by the pandemic, our own projects at Aboitiz Infra Capital continue to spur socio-economic development in the communities we serve. By way of an example, through Apo Agua Infrastructura, we continue to build one of the biggest bulk water supply projects in the country. In partnership with the Davao City Water District, Apo Agua is set to provide next year 300 million liters of water per day to over 1 million Davaoenos. To accelerate construction, we partnered with DCWD, the Davao City LGU, and our host communities to ramp up our manpower while strictly implementing COVID-19 protocols. As of this month, we are employing more than 5,000 skilled workers, mostly from our host communities and neighboring areas. Our integrated economic centers or industrial anchor developments, namely Lima Estate in Batangas and Mactan Economic Zone 2 and West Cebu Industrial Park in Cebu, have sustained their respective operations all throughout the lockdown. These kept local economies running and about 90,000 workers continuously employed. We also provided discounts and other concessions to our industrial locators and commercial tenants, giving them timely relief as they reeled from the drop in sales and unexpected expenses related to COVID-19. Our water estate operations, Lima Water, the water services provided at Lima Estate has continuously provided steady supply of water to locators even at the height of the lockdown in order to ensure that they are able to keep, our locators are able to keep their production lines running and their employees safe. As an employer, Aboitiz Infra Capital and the rest of the Aboitiz Group continue to demonstrate our commitment in protecting team members in multiple ways. Right before the lockdown started last year, we were quick to transition to the work from home setup, only keeping our skeleton workforce on site and providing them with the necessary provisions such as staff housing. Today, we are gradually moving towards, as we gradually move towards recovery, the Aboitiz Group continues to adhere to IATF guidelines in our workplaces. Work from home continues to be implemented for the majority of our team members, and we utilize the SafePass mobile app to ensure efficient and integrated contact tracing in all our sites. We also do regular PCR testing for all our frontliners nationwide. Together with other private sector companies, The Aboitiz Group is helping boost the country's immunization efforts by providing free vaccines to all our team members and their dependents. To help further address gaps in the country's pandemic response and to help contain COVID during recovery, the Aboitiz Group is now working with the NEDA, Asian Institute of Management's Aboitiz School of Innovation, Technology, and Entrepreneurship, or ASITE, and LGUs to significantly improve contact tracing in the country. The collaboration, called the Project Connect, aims to develop an application programming interface, or API, or a software intermediary that will allow the various contact tracing apps to automatically link to government's testing portals. This will ensure seamless contact tracing and aid in the immediate isolation of those who are infected. The goal is to increase the contact tracing ratio of the present 1 infected to 2 to 3 persons to an ideal 1:30 to 37 people traced. This API drastically reduces human intervention and is therefore much quicker and less prone to errors. The API will also enable automated text messaging for contact identification and notification. A true multisectoral collaboration, Project Connect's proof of concept came from lead agency NEDA through Secretary Carl Chua, while the API was developed by ASITE's Dr. Christopher Monterola and Dr. Erica Legara, and funded by Aboitiz. Pasig City serves as the pilot LGU and has already started using this technology last month. Phase 2 will cover the cities of Mandaluyong, Valenzuela, and Marikina, while Phase 3 will include scaling this up to cover other LGUs nationwide and also other private sector companies. Now, going back to PPPs, as advocates of public-private partnerships, we in the Aboitiz Group welcome the government's renewed push for PPP reforms. In May, the House Committee on Public Works and Highways approved the PPP Rationalization Act, primarily authored by Congressman Joey Salceda. The proposed law aims to optimize the government's value for money in PPP projects, provide efficient approvals and incentives, and advocate effective and efficient risk sharing and management. This can go a long way in reviving infrastructure development through PPP, as well as increase the comfort level and confidence of the private sector to invest. I personally have worked on the PPP Act in the previous administration, and the Aboitiz Group, and the rest of the private sector, we are eagerly looking forward to its enactment soon. As we slowly but surely head into recovery, the government can be assured of Aboitiz Infracapital's continued cooperation, interest, and support. We stand ready to partner with the government in ensuring key infrastructure projects are developed and built. This concludes my presentation, Karen. Thank you for your kind attention.
Thank you so much, Ms. Cassette. That was very insightful as to what the private sector is doing to contribute to economic recovery and the Philippine society as a whole. It was great to see it through the eyes of what Aboitiz is doing. And of course, there's no better speaker to talk about PPP than you. And from there, we now talk about mass vaccination, the cure to the public health and economic crisis. And on that topic, we will have our last speaker for today, Mr. Christian Gonzalez. Mr. Gonzalez is the Executive Vice President and Global Corporate Head of the ICTSI Group. He is President of the ICTSI Foundation. Mr. Gonzalez also sits on the board of Bloomberry Resorts and Casino, Manila Water, and Prime Infrastructure Holdings Incorporated. It's my pleasure to introduce to you Mr. Christian Gonzalez.
Hi, Karen. How are you? Sorry, everyone, for the mask. I'm actually at the vaccination center as we speak. I was speaking to your dad, Karen, the other day. Actually, it's been a while. Anyway, guys, sorry. like I said, I'm at the vaccination center, so I'll keep this quick. I think I'll be far more interesting in the Q&A than I will be here. But there is clearly a long way to go in in relation to dealing with the pandemic. And if we think it's going to end anytime soon, all we need to do is look around and read the news on what's happening with the Delta variant in places like the US and more so in other places that don't have such. In summary, in relation to, sorry, I lost you there for a second. By a lot of the other speakers, but in relation to getting out of the pandemic, three things that we've been focused on here. One is working with government to develop consistent and simple policies. That's everything from tracing, which many people spoke about already, and drive. No, the second thing is while we're waiting for vaccinations to really kick in, you do have to have economic stimulus. This is by making it easier for people to go back to work, making it easier for people to find work. I know it's easier said than done, but it is the responsibility of everyone to ensure that we're able to do that. And then finally, in relation to those two, it's rolling out the rapid vaccination, so we don't have to worry about finding ways to stimulate the economy for too long. A couple of the other policies that are critical and again touched upon earlier are in relation to schools and transportation. In relation to schools, the sooner we have a consistent policy applied across the entire Philippines, the sooner people are going to be able to send their kids to school safely, the sooner those people are going to be able to return to their jobs or return to earning money. Now, right now, what you'll see is most families only have one person who has capacity for employment because somebody needs to take care of the kids. This isn't just about the long-term impact of kids not going to school. It's also about the short-term impact of not having people able to go back to their jobs. And yeah, so that will also help stimulate the economy. People coming back to their jobs. We need to find consistent and stable policies in relation to transport. We can't have people, wondering every day whether they're going to be able to take public transport. What does 50% on a bus mean? But again, you guys all know that already, right? Now, consistent policy, stimulus, all of that, everybody's worrying about it. But the most important thing, as I said earlier, to kind of reduce the time that it takes for us to get to that is what I'm doing specifically today which is vaccination. No? Now we learn that one house who runs when you start thinking about that and thinking about how many of these private sector sites you could have in many of the different large cities across the entire Philippines, then you start talking about augmenting what the public sector is already doing, which is close to 400,000 a day, and doubling that, which then cuts the time that it takes for us to get the herd immunity in half, which again reduces the time that we need to worry about all these other things, right? So in relation to vaccinations, we need to get the private sector involved, and the government, very importantly, must listen to the private sector in relation to getting things consistent and creating that simple framework so that someone comes in, gets scanned, gets to the nurse's booth, gets their vaccine, and then walks away and gets monitored in as little time as possible. And if we're able to do that again, and the private sector is allowed to be a frontline provider of vaccinations, then we're talking about being able to get to herd immunity in half the time. Sorry, I was rambling there, Karen.
It's okay. No, yeah. So we experienced a little. There's a bit of a lag. I think it's because of our how reliable our telecoms are in the Philippines. But I think if you're if you're already done, you've sufficiently covered the topic within the time frame actually of 10 minutes per speaker. So uh, unless you want to conclude with anything, Christian, we can start with our open forum.
No, yeah, I'll be much more valuable to you in the Q&A.
Well, you are you gave us really great insights as well in terms of um, the vaccination program and how the private sector really has a great role to play in that as well, especially since you gave us also some insights relating to the experience of the US, even considering they're the country in the world with the most vaccinated population. And so we'll start with the open forum for part two of our program. And we've received some questions addressed to our speakers. The first one is addressed to Miss Cosette, and one is on the infrastructure. Um, and on infrastructure, basically, um, okay, so there was a question earlier about the funds being diverted from infrastructure and to the response to COVID. And the question is, what are your thoughts on this?
That's the right thing to do, right? COVID is an immediate um, an immediate concern of the government, and all funds of the government should be focused on providing assistance and controlling or containing this, right? Improving treating, testing, and tracing capabilities should be the focus of the government on a massive scale. It's only government that can do that.
Okay.
And that's why, the private sector can take up the slack in terms of developing infrastructure, key infrastructure. And we do have a framework for that. And that's been proven in previous administrations, not only in the last one, that private sector participation in infrastructure development is doable.
Okay, thank you so much. And the next question relates to vaccines. So I guess, Christian, this is also something that you can address. Despite continuing economic hardships like unemployment and hunger, the government insists that the national priority should be to achieve herd immunity so that the economy could return to normalcy. How do you think we can resolve this?
Sorry, Karen, I didn't hear the beginning of the question.
Sure. So first, the question says, despite continuing economic hardships like unemployment and hunger, the government insists that the national priority should be to achieve herd immunity so that the economy could return to normalcy. How do you think we can resolve this? I guess resolve this with the fact that we've only had 2% vaccination rate at this point.
Get the private sector involved and ensure that unlike what we did with contact tracing where it's kanya-kanyang diskarte, make sure that the government is acting as a coordinator getting best practices from each private sector vaccine system, and getting them, what's the word I'm looking for? Getting all those best practices rolled out across all the vaccine centers so that everybody's, playing to the same rules, generating the same efficiencies with the best system possible. And I'm telling you, based on what I'm seeing and what I see now, is with a very simple setup, you can do 500 people an hour. With of course, this is a large unused facility, right? We're using infrastructure now that's supposed to be used for tourism that's empty. So we have the luxury of doing that. But a lot of people have parking garages. A lot of people have ballrooms. A lot of people have things like this. And if you very quickly get everybody using the same very efficient setup, I'm telling you, in each site, you can do 500, 600, 700, maybe even an hour. And we won't have to, the government can then focus on what the government should be focusing on, alleviating poverty and things like that, not having to worry about how we're going to go from 2% to 3%, because we get very quickly to 60%. But that's not going to happen without the private sector.
Okay. And that's really, that's a great answer. That's also related to one of the attendees' question here. So one of the attendees asks, how do you compare versus LGU or government process? For example, how long from start to finish is the vaccination process? So I guess the question is basically the process from the private sector as it compares to the LGU or government process.
At the vaccination center, there's two bottlenecks, right? One is determining whether the person has an appointment or not. The way the Americans sorted that out is forget about appointments, just turn up at a drugstore, right? But that's because they were able to deploy vaccines across hundreds of thousands of places. We don't have that kind of luxury. So you have to have, in order to solve that bottleneck, you have to have a consistent way of creating appointments and validating them. The validating is easy, right? Scan a QR code. But you don't want 4 or 5 people in a household having to do appointments 4 or 5 different ways. One is doing appointments with this company. Another one is doing it with the LGU. Another one is doing it in the province that they're from. That's a mess. So that's one thing that needs to get sorted out. And again, the solutions are very clear, right? It's just you need one person to say this is how it's going to be done. The second bottleneck is the health screening. And it ties into one of the other questions here, right? Which is vaccine confidence. But the health screening is super important. But you shouldn't have to turn up to a vaccine center and sit down with a doctor for 15 minutes to fill up a health screening form, right? You can do it in advance. And if you're a 25-year-old, extremely healthy person that eats well, doesn't smoke, gets their checkups all the time. I know that getting checkups all the time isn't necessarily a common thing here, but let's just say generally a healthy person, you should be able to have done that health screening, go straight through, have the person look at you and say, yep, he's healthy, get the job, right? Now, if you have a comorbidity, if you have, something else that makes you a bit high risk, then set up a system, set up a policy across all vaccine centers where the nurse or the jabber says, based on what I see here, it takes 30 seconds. Based on what I see here, you should go speak to the doctor. So instead of every single person speaking to the doctor for 15 minutes, you have 1 out of 20, 1 out of 10 at worst. And everybody else, the other 90%, the other 95% are going straight in. And again, here with that setup, it takes from start to finish 5 minutes. I mean, from the time the person has validated that they actually have an appointment.
Okay, thank you. That's a huge difference. 5 minutes to waiting for like an hour or so. And I heard that
it's all the application of the health screening, because once you create a bottleneck like that, it dominoes into everybody else.
Yeah. Thank you, Christian. That's a very, very good insight. And I hope like the government and the private sector can work together so that we can really streamline that process of vaccination. The next question we have is something that is addressed to Ms. Canilao. Um, how do you strike a balance between the interests of your shareholders as well as of your stakeholders in aiming for collective economic recovery?
Well, I think it was mentioned a while ago by Risa, right? There's no difference. You really need to engage and listen to all stakeholders, the host communities. That's why well, aside from PPP, any private sector project, especially PPPs, no, sponsored by government, the convening power of the private sector is really put to use. Case in point, like what I mentioned a while ago for our bulk water project in Davao. The we had to deal. We are dealing with around 27 barangays, surrounding surrounding our the whole length of the project, right? So we had to work closely, engage the barangays, the LGUs, talk to them about their concerns, issues on COVID and how to control COVID, and also to balance that with getting workers from the barangays for the project. So stakeholders, it's not misaligned, shareholders as well as other stakeholders concerned, and even government, the public, right, and the public. So that's a good thing about big PPP project. It becomes you now have a shared vision, and because of the contractual agreement, you need to finish the project as soon as possible to be able to operate and start recovering the investments that's been put there. So yeah, I guess that like what I go back to collect really doing comprehensive and a broad stakeholder engagement and management, which includes shareholders as well as public stakeholders.
Thank you, Ms. Cosette. That's very well said. And another question from our audience to Mr. Gonzalez. How can the government and the private sector boost the people's vaccine confidence? Yeah, very interesting question.
We- that's a really good question, right? And you can do it in draconian ways, and you can do it in softer ways. Um, I I I think again, one is through simplifying the whole process, so people forget about the health side, right? But some people just don't. Some people feel that they're going to be tremendously inconvenienced by going to get a vaccine. I can't go to work today. I have to spend the whole day in line. That kind of thing. So one thing is for as more of these efficient vaccine centers roll out, show people that it's easy, right? And make sure it's easy. And in relation to health, I've been reading a lot about that, and we saw, at least internally, when you make it about the collective. Hey, you say something like, hey, you must get vaccinated because it's good for everybody, it's good for the economy, it's good for the country. Surprisingly, that doesn't work. What works is something more personal, right? It's going to allow you to go out and do things. It's going to allow you to have to have an easier time at work. You are not going to have to keep spending time getting tested. You're not going to have to keep spending money getting tested. So again, this is very surprising, but it's in this case, it's been proven in many different countries. It's not about collective statements, it's about very personal statements, and making them see the benefit to themselves. And I think the government needs to have more marketing geared towards that.
Terrific suggestion. More incentive based than draconian, right? Like rather than, well, we had the president stating before, like we're gonna put to jail those people who refuse to get vaccinated. So I think this would be a great suggestion for our government in
Yeah,
terms of,
just assume everybody's selfish and they themselves want to lead their own normal lives, right?
yeah, yep, very
So
good.
focus your marketing on that.
Yeah, thank you so much, Christian. And our last question is addressed to both speakers. Uh, with the ongoing surge in COVID 19 cases domestically, how do you think businesses can continue to find opportunities for expansion?
Yeah, I think it goes back to making sure that all stakeholders are involved, right? So as a business, as a business, for example, you need, for a business to thrive, you need to be able to engage the communities, the government, national and local government, to put in place efficient and effective protocol on how to manage this pandemic, on how to live with this pandemic, while still pursuing business opportunities. During the pandemic, we've seen how we need more effective and efficient, more towers, more working internet, right, for us to be able to work from anywhere, and for us to continue with our operations and businesses. So that exacerbated or highlighted the need for better telecommunications infrastructure. And that's an opportunity. That's an opportunity, and that the private sector can take a look at. That opens up a whole new sector on how we can accelerate the digital transformation of the country. And it's very exciting. Toti mentioned a while ago about doing PPPs for hard infrastructure and hard infrastructure like airports and bridges, but we can actually use PPP for soft infrastructure. Case in point is the civil registry system information technology, right? That was a PPP that was done and completed, bidded out in the last admin and completed, I guess, in the early years of this administration. That helped a lot in securing birth certificate, death certificates online, right? No queue at all. That's a soft PPP, and that can be applied as well in, for example, expanding tracing, treatment, and testing capabilities. No? And then the PPPs for social infrastructure, such as hospitals. We've started that before, and this is something that can be picked up again, so that when things we will live with this pandemic for the next 2 or 3 years, right? We will live with this pandemic until we hit that herd immunity, which I hope we hit it next year. But if we don't, we'll have to be ready on how to expand the treatment capability of the country, right? And let the private sector come in, right? So there's a lot that can be done in using the PPP framework, not only for the hard infrastructure that will improve tourism, that will improve industry again, that will alleviate people suffering, when they use public transport. But we can use PPP for the soft infrastructure, more on IT, health, and education.
Thank you, Ms. Cassette. And actually, during your while you were speaking, you also hit one of the questions of one of our audience that asked, like, realistically, when do you think we can achieve herd immunity? So thank you, because you also answered that question. Christian, any thoughts on businesses expanding amidst the pandemic?
Yeah, Cosette said it all already, no? But I think that question should be asked to the government. The opportunities for PPPs, and that's what we do, right, at ICTSI. Those opportunities on the soft side, new opportunities, new post-pandemic opportunities, those are all there. Those are all now there, but opportunities for us in the infrastructure space haven't changed. The opportunities still abound. The problem is what has changed are the economic conditions of those opportunities. So the government needs to understand that what was worth 100 3 years ago may not be worth 100 today. Maybe it is, but maybe it's not, right? But they need to keep an open mind to this, and they need to look at the assets and see what they are worth today, and push them, and and also push the opportunity in a way that the terms of that particular PPP relate to that specific project. The terms for a port in Iloilo are going to be, and conditions are going to be very, very different to the terms and conditions of an airport opportunity in Clark. Those two are totally different things. And the sooner they realize that not all PPPs are created equal, that the sooner we'll be able to tap those opportunities.
Thank you. Great answers. Thank you again, Ms. Cosette, for sharing with us your extensive expertise in PPP, and also Christian for, well, I think it's very relevant that you took this forum from the vaccination side. And congratulations to ICTSI for
Thank you.
the first shipment of Moderna finally arriving in the Philippines.
Karen, can I just say something about herd immunity?
Yes, of course.
You have a number of cities in NCR that can, if they continue the way they're going now, and you keep adding private vaccine centers, these cities in NCR can hit herd immunity in September and October.
That's great.
And if you get a more consistent vaccine supply, I can almost tell you that these guys will guarantee that they do that. So when we look at herd immunity, we need to look at it not on the broader national level, but different regions.
And yeah,
Go ahead.
sorry, Karen. And if I may add, no, if government will start awarding projects, airport projects, those are the gateway to provinces, right, outside of Metro Manila. The private sector will ensure, I bet you, in making sure that the population, diba, will be vaccinated. That's what the private sector brings. Like in Iloilo, once they have that project in Iloilo, they will work towards ensuring that the communities where the private sector operate will be vaccinated the soonest time possible. Again, another pathway to reaching herd immunity, not necessarily just on this vaccination program of the government with the private sector, but the private sector with their own projects will do that. They will ensure that the stakeholders and the communities and the ecosystem of businesses surrounding where their projects are, they'll ensure that they'll get the vaccine. It's to our interest, right? That where we operate, people will be vaccinated, will be treated, and there will be effective and efficient contact tracing. That's what we bring to an airport project, for example.
Yeah. These are all excellent points, and I think it's very it ties very well with the part one speakers, where we had Riza Mantering, for instance, talk about data-based decision making and being able to really plan ahead forward with the government having clearer direction as to where we should go during this post pandemic recovery. And I think the role of the private sector was very much well highlighted by you, Cassette and Christian. And thank you again, because we had an audience ask about achieving herd immunity, and I was thinking this is more of maybe a medical scientific question, but your inputs really answered that question as to what really is a realistic expectation. Thank you so much. And yeah, we just really finished right on time in terms of the open forum. So thank you to our speakers for being great in terms of timing your speaking how much you spoke and then answering the questions very well. And now to deliver our closing remarks is, of course, he needs no introduction, but he's the president of Strat-based ADR Institute, Professor Victor Andres Dindo Manhit.
Thank you, Karen. Thank you for moderating our great thought leaders, speakers, with all their views. And it really reminds me of how me as a professor of public management and public administration has championed private sector role and working with government as key to our economic development. And I'd like really to use this opportunity to drive this idea of what I call business continuity for inclusive recovery. While the quarantine measures that we all had to bear for more than a year already were meant to counter the COVID-19 pandemic, they also resulted in severe disruptions to the Philippine economy. Fortunately, the Philippines has a cohesive, efficient, and innovative private sector that continues to not only keep the economy afloat, but also strives to address the wide range of needs of its own corporate stakeholders to achieve shared prosperity and inclusive growth. The private sector has led in the mobilization of investments, job creation, income security needed to alleviate poverty, inequality, and economic insecurities brought about by this continuing public health crisis. We are thankful to the private sector. We are thankful for the thought leadership that we saw this morning from the private sector in the Philippines, where it has made a difference in helping bring more confidence to the economy to get back to the road of recovery. The increasing number of vaccine stocks being delivered has improved the chances of achieving herd immunity among the local population, especially the workforce. Apart from the vaccines, the private sector has also engaged itself with COVID-19 testing, isolation, and vaccination activities to lighten the burden being carried by the national government. The ideas from our thought leaders this morning matter much in terms of implementing coordinated activities to make sure that the right things are done as quickly as possible. Amid the challenges brought about by this pandemic, the private sector's creation of a genuine and sustainable value for all entails businesses to embrace the concept of stakeholder capitalism and broaden their definition of a stakeholder community, makes for a laudable recognition as the engagement includes not only shareholders, but the whole of society as a whole. Shaping a responsive roadmap to recovery must integrate the benefits of stakeholder communities with economic continuity, propelled by private-public partnership in the different key sectors and even key challenges brought about by this pandemic. At this point, businesses will hopefully be able to continue their operations with less drawbacks. On the other hand, government must provide a conducive regulatory environment for businesses to thrive and expand under this extraordinarily challenging situation. The jobs and livelihood opportunities that the private sector creates are critical in overcoming the economic consequences of this continuing public health crisis. We need, as a whole society, to act in unison to reverse the negative impact of the global pandemic by sparing job creation at the soonest possible time, activating economic activities, and increasing investment from the private sector. Without the private sector's active involvement in national recovery, the Philippines may not be able to quickly overcome this ongoing crisis. I take this pleasure to thank our speakers, from our dear Governor Diwa Ginugunda, I continue to call him Governor, which he should have been Governor, to private sector leadership from Mr. Ed Lacson, Ms. Risa Mantaring, even Attorney Joseph, my friend, old friend Toti Chiquiampo, president of FEF, Cosette, who I've worked with and have admired in their advocacy of PPP, and now in the private sector, and of course, Christian Gonzalez. Imagine the private sector taking a big part in ensuring vaccination in our country. Again, thank you so much, and thank you for all our participants that watch and listen. I think not from the private sector and even I think from media. Thank you so much, and hopefully we can have you again in our next roundtable discussion, as we hope to play a role in shaping the direction of public policy in the Philippine society. Thank you. Thank you so much.